The subprime bubble 2.0 is about to burst. It turns out that the US government has been making the mortgage payments for hundreds of thousands of defaulted mortgage borrowers using taxpayer dollars, and this was just exposed by the Wall Street Journal. And if it's reversed, it has the potential to cause a massive cataclysmic housing downturn in many cities and neighborhoods across America. And the big issue is the FHA mortgage program, the first-time home buyer mortgage program where you could put 3% down to buy a house. This mortgage program now has a 14% default rate. The default rate's 13.5%. Over 1 million mortgage borrowers on the FHA program are currently in default, and the Biden administration basically was blocking these defaulted mortgages from going to foreclosure. And what
1 million FHA home loans in default is a serious problem. We're going to talk about in the Real Estate Live today why this happened and how home buyers and investors can capitalize on this opportunity to not only buy your first home, but for those investors to increase your monthly cash flow and also increase your portfolio at the exact same time, decreasing your tax liability. This is going to be good, guys. Let's get this thing. You see that thing, baby? Let's get it and let's go.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raised the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from when I brainstorm.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of the Cash Flow Club Real Estate Friday Live. Cliff, how you doing? Big time. You doing all right, baby?
Yeah, man, doing good, man. This a busy week, but we just getting back to it, man.
Yes, sir, man. This has been a very busy day for your partner, man. I got to ask a question. Did we get the bag, big dog?
Yeah, we got the bag.
We got the bag. Yes, sir, man. It is what it is, man. But yeah, guys, we're going to dive into this thing real quickly, man. I can tell you this week before I dive into it, Cliff, this has been one of the most interesting weeks in my life, specifically dealing with banks, because I refinanced one of my assets. I made a nice amount of coin on the refinance. It was the longest refinance in American history. It was. I mean, when I say the buffoonery going on with a lot of these people, man, it was crazy, man. But it was. Have you ever experienced anything like that at all, Cliff? Before?
Oh man, anytime you're getting a loan from a bank, they gonna want documentation after documentation. If you got a bad lender, they're gonna ask for it 2, 3 times, drop the ball. So it's a long process to go through that.
Yeah, it is, guys. But guys, let's dive into this topic. Y'all here not for us to talk about what's going on with these bad lenders. Here to talk about what's going on with real estate and business, man. So, guys, today, guys, we have a myriad of topics, guys. Real quickly here, we have today's topics is here we go. 1 million FHA home loans are in default. 1 million. That's 14%, right? Number 2, we're going to talk about why so many FHA loans are in default. Number 3, we're going to talk about the top Q&As, question and answers for home buyers to take advantage of this opportunity. It's an opportunity. And number 4, we're going to talk about the top Q&As for investors to take advantage of this opportunity. All right, guys. So let's dive in this real quickly, Cliff. Man, let's dive in this thing real fast, man. Let's go to our friends at Reventure App, man. What they did was they broke this deal. They broke this whole thing, guys, concerning what's going on with all of these foreclosures. And Cliff, man, this really kind of shocked me, man, because of the fact that for me, I just said, this don't make no sense to me at all. And at first I was like, this can't be correct. And Cliff, it is correct, man. So, man, let's dive into this real quickly, man, to talk about what's going on here, man. So here we go. Let's see what I say. Here we go.
The subprime bubble 2.0 is about to burst. It turns out that the US government has been making the mortgage payments for hundreds of thousands of defaulted mortgage borrowers using taxpayer dollars, and this was just exposed by the Wall Street Journal.
Wow.
And if it's reversed, it has the potential to cause a massive cataclysmic housing downturn in many cities and neighborhoods across America. And the big issue is the FHA mortgage program, the first-time home buyer mortgage program, where you could put 3% down to buy a house. This mortgage program now has a 14% default rate.
Damn.
The default rate's 13.5%. Over 1 million mortgage borrowers on the FHA program are currently in default, and the Biden administration basically was blocking these defaulted mortgages from going to foreclosure. And what the Biden administration was doing was that when a mortgage borrower went in default and claimed financial hardship, they stepped in and made the mortgage payments for them.
Damn.
Or they tacked the mortgage payments onto the back of the loan so the borrower has more debt. And this has been something that's been artificially inflating the housing bubble and preventing the foreclosures and the listings from hitting the market. And some of the things that I'm gonna show you in this video are gonna absolutely shock you. I was shocked and appalled at some of the things I read about what the US government has been doing. This is one of the biggest scams that the US government has been involved with in decades, in my opinion, because essentially what the government was doing was they were giving this loan program for first-time buyers where your credit score could be as low as 580. You could have a 580 credit score and put 3.5 down, and they would give these borrowers these subprime loans. I mean, these are subprime loans. A bank would never offer these loans without the government backing. And then when that borrower would inevitably default, sometimes within only a year, the government would prevent it from going to foreclosure using taxpayer money. Now that this has been exposed by the Wall Street Journal op-ed, which highlighted that Biden's mortgage relief program caused the subprime crisis and that there's an FHA subprime bubble, what's gonna happen now? What's the Trump administration and Elon Musk going to do in response? I think particularly an area that could see lower prices if these foreclosures are allowed to happen. There's around 400,000 backlogged foreclosures right now that are being stopped by the US government. I think if they're allowed to happen, we could see prices in a city like Fort Worth, Texas, where I am right now, we could see them drop by a lot. Because there's a lot of FHA mortgage borrowers here in Fort Worth. A lot of people have actually bought in home building communities from builders like D.R. Horton with FHA low down payment mortgages, and a lot of them are now going into default. And so I think we could see lower prices here in Fort Worth. We could see lower prices in a city like Las Vegas. We could see lower prices in Orlando. Those are some of the top markets for FHA mortgages in America and would be some of the ones that are most exposed if these foreclosures are set loose and if the Trump administration does the right thing and turns off this subprime mortgage support offered by the US government. And I think some people in the real estate industry watching this might take issue with me calling these subprime loans. They're gonna say, no, Nick, these loans have income documented. They're nothing like the mortgages from the mid-2000s. But the crazy thing, everyone, is that when you look at the credit quality of these mortgages, they're horrible. They're worse than they were in the mid-2000s. The Wall Street Journal has a graph showing the percentage of FHA borrowers who have a debt-to-income ratio above 43%. It's over 2/3. Over 2/3 of FHA borrowers, when they get the mortgage, have to pay over 43% of their income to debt costs.
Wow.
I want you to think about that. That means pretty much anyone borrowing from the FHA program right now is doing so in a situation where they can't really afford the payments. Back actually in the 90s and 2000s, it was only a quarter of all FHA mortgages had a debt to income above 43%. And some of the stuff that was happening here, folks, was absolutely wild. If you go further into this Wall Street Journal article, they mention how in 2024, mortgage servicers made 552,000 incentive payments to mortgage borrowers to prevent them from getting foreclosed on.
Wow.
Translation, mortgage servicers took money from the US government FHA mortgage program and put it in the pockets of defaulted home owners under the FHA mortgage program who could not make their payments. That is absolutely absurd.
So Cliff, man, it goes on and on and on concerning this sham. This is a sham.
Yeah, my first thought is what's driving the missed payments. Typically you're going to see that unemployment rate is spiking, which causes some foreclosures to spike. Um, you might have a recession where you start seeing more firings start happening, just different indicators in the market that are going to show why all of a sudden you're going to have disruptions. So I wonder why there's this spike. Usually FHA, they look like 30-year fixed mortgages. So,
Mhm.
there's nothing to spark all of a sudden a mass amount of people missing their payments. So I'm trying to figure out what that indicator is. Something
Sure.
happened.
Well, I would say the indicator was the inflation rate because this happened under Biden. This his whole actions,
Right,
and
right.
I
Yeah.
believe it was in the year 2021 or 22, one of the two. Well, if you look at the inflation rate in 2022, it went up to 9%. 9.2, 9.3%. That's the inflation rate after they changed the definition from every 24 months to every 12 months.
Right.
And so what's happening is I think the people then manufactured a pay raise with borrowing more credit card debt. So now they have a higher credit card debt coupled with their car debt, their vehicle debt, and then they also have the mortgage debt as well also. And they already had a high DTI off the riff with a low credit score. So they're paying probably the maximum interest rate. Would you agree?
Yeah, they did in the last couple of years, especially, when interest rates spiked, you had them up going up to 7, 8, 9%.
Yeah.
Um, yeah, I can see how the inflation rate could, add those additional costs for the homeowner, especially FHA. If you're at 50% of your income is gone, right?
Yeah.
Just because your mortgage is already paid for, boom. So you got 50% left, plus those additional costs are up 10, 20%. Yeah, I guess I'm surprised that's all it took, right? Just that
Yeah.
marginal transition from typical inflation rate 2, 3% to 8, 9%. And all of a sudden you have a mass amount of foreclosures coming. That's crazy.
That's I mean that's really crazy what's really going on there, man. That's
Mm.
ludicrous, man. So that's one of the reasons why I answered the questions why so many FHA loans are in default. Simple, guys. The cost of living went up. And to be honest with you, they're paying a higher interest rate because of the the lower credit score. So they're paying a higher interest rate when it comes to their car loans, higher interest rate when it comes to their credit cards, and another high interest rate when it comes to their home. Do the math.
Hmm.
Do the math. It's very simple. Now let's go to the second clip. How the government might be hiding true foreclosure numbers. How might they be? Because you heard it said that the Biden administration purposely hid this by not allowing for these loans to be foreclosed on. They actually used taxpayer money, floated through the servicer, and the servicer made the payment for the consumer, or they put what was owed on the back end of the loan, i.e., a deferment. Uh, what? How? Why you think? Why would you think the government would actually do this?
So I know a little bit about that program. So I'm
Okay.
wondering when these numbers came out because I know that program came out during COVID, right? And
Mm,
they extended it like you remember, like New York and California, they did those long extensions well after the pandemic was over. They kept extending those. So I think during the Biden administration, they extended these programs because initially they were there because there was a huge spike in unemployment.
yeah.
Huge. A lot of people were let go because they didn't know what's going to happen. The government put in this program that said if you have a government backed loan, you can not pay, put it on the back of the loan, and we're going to come and just make those payments whenever we need to. So I think that's an extension of that program. And I'm surprised are they saying it's still going on right now?
Yes.
Or
Yes.
that's crazy.
The
Yeah, yeah.
the the Trump administration would have to reverse this. That's why he was saying if they reverse
Mm,
this, well, what happened is you're looking at 400,000 homes would just be flooded to the market foreclosed.
yeah.
That's a big number for foreclosures, Cliff. Would you agree?
Yeah. Oh yeah, that's a ton of foreclosures. I mean, it's that but that tells you something right there. You look at those statistics, right? So you get 7, 8% of inflation coming onto the market, even though unemployment rate is low, right? That's all it
Yep.
takes in order to push the average FHA home buyer over the
Yep.
edge. It tells you that everybody on the FHA basically is razor thin for the most part.
Yeah. This happened, it says, under the guise of the COVID relief, the Biden administration masked the growing troubles in the housing market by paying off borrowers and mortgage services to prevent foreclosures. Of 52,531 FHA loans last year that went seriously delinquent within the first year, only 9 resulted in foreclosures. So out of the 52,531 that should have went in foreclosure, only 9 of them were allowed to go foreclosure. Just 9. Just 9 because they paid via. So uh, I believe with the COVID relief
Mhm,
bill that Biden actually passed,
mhm.
some of the language in that flowed to this FHA scenario. I guarantee you it did. I guarantee you it did. I
Yeah,
guarantee you did. Mhm.
yeah, that's kinda crazy that they were paying. I wonder if that's if they how much they put on that back end of the loan. So, if the government is paying the servicer, that means that loan should be getting paid. So,
Yeah.
what's happening to the actual homeowner? Are they having to pay the government back? Is this a
Yes.
additional loan?
Yes. Most likely, what they're doing is they're
Mm,
probably reflected as income for the consumer to be put on their taxes, so that the
mm,
government can actually generate a tax revenue from doing that. They've increased the balance on their mortgage, so it's tied to the property itself, in
right, yeah.
hopes that they'll turn it around, or someone to come in and it's pay it off, they refinance it down. But typically in today's market, back in 2020 or 2021, 2022, uh, that's when you bought at the height of the market. Who's going to want to
True.
refinance that? Would you, Cliff?
Nah, yeah, that's true. During that time of during that time period, markets were going up. Man, at that point, there was a shrinkage in the amount of properties on the market. But there were still low interest rates at that period of time because they had cut
Correct.
them because of COVID. So there was a frenzy going on. So I remember that because I was doing appraisals and I
Hmm.
kept seeing month over month crazy inflation numbers in real estate. And I had my mentor telling me he had never seen that in 20 years,
Yeah, he did.
anything like that.
Hmm. Because they were hiding the numbers.
Mm,
They were hiding the numbers by using a COVID relief bill by Biden, right? To um, basically put some money in the coffers of the servicers to pay for those delinquent uh, um, uh, properties, so that they could not go so that they could not go be foreclosed on. Sad, trash though. Sad, sad.
yeah, I mean, the only thing you could do is in the program and deal with the foreclosures on the books.
So you can do. And then
Mhm.
number 3, Cliff, what does this mean for the housing market and the market values moving forward? Let's do 2 hypotheticals. Trump ends this debacle and 400,000 homes flood the market, foreclosure. What would they do for the housing market and home values?
Right. So man, so if you get a bunch of homes on the market, obviously that's going to bring down housing prices because there's more inventory. People have more options to buy. Um, so it's going to bring it down. But if they can drop the interest rates, that's going to bring up a little bit of demand. I still think there's pent up demand in the marketplace.
How?
Uh, I'm
Where?
I'm I'm still seeing it. Homes there. So what ended up happening was the inventory shrunk, interest rates went up higher,
Yeah,
right? So nobody was really buying.
yeah,
If you wanted to buy, there's less homes on the market, and you're paying a higher interest rate. So it's like,
sure,
why would I pay for when I get no options and I'm paying high interest for the low options I got? Doesn't make
sure,
sense, right?
sure.
So what's happening, like what you're seeing, what you're showing is there's a lot of inventory. So if
Yeah,
inventory comes on the market plus low interest rates, now as a buyer, I'm going, my costs are lower and I have more options. So you can see more people coming off the sideline. There's more people who can actually purchase homes than you think, but you're going to see it in probably a lot of areas like Oklahoma, Tennessee, Probably some Dallas. We're going sideways right now, but I don't think you're going to see that big spike in California, New York, Chicago.
Sure. Well, I guess what would drive down the interest rates in today's market?
Well, I think it's what Trump's doing now, where he's trying to lower government spending that was pushing the inflation rate. All that government spending was pushing inflation rate. So if we start cutting a lot of those
Sure.
programs, government stops spending all that money.
Okay.
Now we're more fiscally solvent, we don't have to we can keep interest rates where they are or slightly lower because Trump's already pushing to get it lower.
Yeah, I like his tariff play. I see it actually working because you have Canada and Mexico, as well as Ukraine also, and Russia was negotiation outside those those two countries outside of tariffs. They are agreeing to his terms. The tariffs are forcing Canada as well as Mexico and other countries to come back to the table to renegotiate bad deals.
Right.
Trump's tariff play is he wants open and free trade, reciprocal, right?
Mm-hmm.
And what's happening is he's using the tool of a tariff to force that into renegotiation. Now, there's been some short-term pain, right, which he's okay with for a long-term gain. But you saw, and I want to see the calculations of this, the inflation rate went down, even while this tariff stuff has been going on. Regulations have been cut significantly when it comes to oil and gas. Gas prices went down. There was a concern concerning the eggs, but they did go up. Eggs prices went down. So things are going down as far as pricing in some cases. You agree, Cliff? You disagree?
Yeah, because I was trying to look for it right here to just verify the CPI, to see where we're at. But yeah, I mean, Biden kept spending a bunch of money.
Sure.
And that drove up a lot of prices. We're starting to see it calm down and get back to a more stable market. So the next thing is, okay, where are we heading, right? Because now you're looking, we're coming off multiple major shifts in the marketplace, and we're restructuring right now. I mean, let me ask you, where are you putting your money right now, based off all the shifts that we're seeing? Where's the best place to park? You got additional cash. You're looking to be able to get a return, have strong. Is it the best time to get into rentals? And if you're going to, where would you get them?
I would say this is a great time to get into rentals right now, because I don't think this is an environment to flip. Am I saying that you cannot flip? You can flip depending on if you find the right buyer. But I don't think right now is a good environment from a macro perspective to flip. I think that acquiring a distressed property below wholesale, renovating the property by adding value, right, and then refinancing to long-term debt, put out your cash to pay back your initial investment plus some profit tax free, then leasing the property out is probably the better play, because I believe the real estate market is going to do this here moving forward. Go up. The reason why is because of the fact that there's a correction happening right now. It's happening right now. And I believe Trump is trying to soften the blow with his tariff play. And now, Cliff, if he does this, Cliff, this is going to be off the chain. If he, with Congress, eliminates the income tax, coupled with that tariff play to get the fair and fair trade to bring manufacturing back to the U.S., we're already the banking capital of the world. You're talking about a economic explosion because of the fact that you have external investments getting brought back into the United States, who's already the banking capital of the world, right? You begin to manufacture your product here as well also. Man, you're talking about an explosion of prosperity. You agree, Cliff? You disagree?
No, I see that too. Because if you have, the reason why he's doing this, is the trade deficit, right? So even with Canada, I think we have about $200 billion. So that means we have $200 billion leaving the United States that could stay in here. The reason why we're going to Canada is because they're selling it to us cheaper.
Yes.
Okay, cool. So that's lower prices. But the problem is that additional revenue of $200 billion is leaving.
That's correct.
So we keep it in the United States, keep that $200 billion here. Prices go a little bit higher, but the money stays here.
Correct.
right? And
Correct.
so, yeah, I mean, I think it's smart. It makes sense. Especially what it makes everybody else do is say, if you can't make money off the United States, if another country can't make money off the United States, are they solvent? And if they're not
Mm.
solvent, then you start getting into how are you a country, right?
Correct.
Imagine if the United States could not exist if we couldn't buy from China. If China said you're cut
Mm.
off
Mm.
and we couldn't be solvent, are we really a country? What are we? Right?
Yeah.
And it makes
Yeah.
so he's got a point there. If you can't live without the United States, then we got to restructure how we dealing with each other.
Yes, sir. One of the questions that I got, Cliff, was this here is, okay, let's say if he brings back the manufacturing to America, it takes time
Yeah.
to build a plant. I said, you're correct. So what happens in that leeway time? I said, well, you go ahead. You go ahead
Man,
and comment. What do you think?
they're not thinking, okay, see, I understand the first thought of that, right? You're saying, okay, well, we have tariffs. Well, okay, then you just build it here, right? Because instead of shipping it from China or shipping it from India or wherever it is, you just build here. Cool.
Yeah.
The plant that you're looking for your products for Amazon and all that, it's already here. And
Yeah.
they say, oh, it's going to take a while to build. Well, hold up. These plants that you're talking about building, these manufacturing facilities you're talking about building, these are $1 billion, 50 million, $100 million buildings. That's
Correct.
material. That's workers. That's construction sites. That's roads. That's trucking. That's oil. That's gas.
Yep.
Just to even build it. So there's going to be right away when you start getting into the infrastructure, you're already going to be spending billions of dollars just to build it. Now that it's built, you're going to have even more production come from it because now you actually have the warehouse being built, the inventory being stored. So you're making money along that whole process.
Yes.
And what that really does is it gives money to the average person. That money is coming to that
Yeah.
construction worker, it's coming to the truck driver, the person at that gas station. The money stays in their pockets.
Correct. Now,
Mhm.
brilliant breakdown, Cliff. Investments come, the money's brought back to the United States, right? It then
Mhm.
it's invested. It then hires workers to do all phases of the plant, whether it be building the plant, putting the stuff, putting the machinery in the plant, partner with the cities, things of that nature. Also, then hiring the staff that goes in there. That money is hiring new individuals. What happens is when you hire someone, they can pay the wage, right? A higher
Mhm.
wage. When they get paid a higher wage, what's actually happening? And then you eliminate the income tax. More money stays in the pockets of the consumers. What that mean? They can go out and buy more houses. They can go out and buy more cars. They can go out and invest in more IRAs and 401ks and 403bs and life insurance policies. Money begins to flow because we're in a debtor nation. This is not cultural economics. That doesn't exist. That's made up. It's a talking point. This is called business 101. When me and Cliff hire a GC, Cliff, we are giving money to the GC, and the GC is what? Performing the service. By us giving the money to the GC makes money. That's not trickle down. That's called business. Am I right, Cliff?
Exactly. I mean, it's all flow. To break it down, like you just said, to how we trying to keep it in, we give money to the GC. The GC buys from Home Depot. Home Depot makes a return on their investment, gives it back to the investors who open another plant, who hire the GC, and it flows through that cycle all over again, all in the United States. So yeah, man, it's very smart because the way that we're constructed today, because I was just looking it up, I know
Mhm.
the Treasury Secretary, man, I'm gonna mess up his last name, but
You talking about
Scott Bessent,
Scott percent? Yeah, percent.
Scott
Gotcha.
Bessent,
Yeah.
man, he was going over the statistics. This is wild. Let me know what you think about this. He was saying the top 10% of earners in the United States make up 50% of all consumption.
That's correct.
50%. He's saying we need that's not right.
At all.
Basically, all those people with excess cash, they're the ones going out to restaurants,
Yeah.
buying cars,
Yeah.
clothes.
Yeah.
The rest of us, the people who are below that top 10%, people who are like that, man, they just getting by. They go to
Yeah.
Walmart, they go on
Yeah.
their basics, they getting their basics done, and
Yep.
they cool. And we
Yep.
gotta change that dynamic.
Got to. He's spot on. So, man, I gotta find. I'm gonna find this this video clip real fast of this gentleman talking about Trump's his plan, man. And I was like, this it made, matter of fact, it made sense. I'm gonna get it real fast. But Cliff, you're spot on. You're spot on. Now, Cliff, while I'm doing this real quickly, man. Okay, now that we talked about what's going on, how it was a trash policy. Here's my question to you, real fast, Cliff. What are the top questions that buyers should do right now? Question answer that buyers should be doing right now to take advantage of this opportunity. You are a licensed appraiser. You have real world experience in this area from a license perspective. What do you think?
I would negotiate hard. I mean, you always want to, but I think more now it's less of just trying and actually really you can actually get it. So I'm seeing a lot of people trying to um, push the market, right?
Yeah,
Right now, where basically pushing the market means you're fixing up the property and you're trying to expand the value of that property based upon other homes are fixed up that may be outside the local neighborhood, let's say.
yeah, yeah.
And it's not happening. The
Hmm.
reason why it's not happening is because the market is not having enough sales. There's not enough turnover that's happening in that local market to push that. When it's flying on all cylinders and the market's hot, it's happening consistently. There's the
Yeah.
comparables available. It's 2 blocks over, maybe it's a mile and a half. That's not happening. We're not having enough turnover right now. So transaction volume is low. Right.
Hmm.
So the advice I would give, because you know the transaction volume is low, when you put in an offer, realize they probably don't have a backup.
Mm. So what you're saying is, wow, write that down, guys. What you're saying is, if you are an initial buyer of a property, you're probably the only offer on the table. They're going to position themselves as being, we got several other offers, but they really don't. You're really the only offer on the table, correct?
Yep. And they're consistently over the days on market are long. So what you can do is, man, and here's another trick you could do: put in an offer, make
Hmm.
it low. If they say no, he's not interested, follow up every week. Hey, my offer's still around. Follow up the
Mm.
next week because there's just not there's certain core markets and neighborhoods those are going to sell because everybody
Of
trying to get in that
course,
neighborhood.
of course,
But for the average home that I'm seeing, the realtors, they are pricing these way too high,
they are.
way too
They
high.
are. They really are. It didn't make any sense to me at all.
I can understand what ended up happening is they're looking at prices from about 2 or 3 years ago when we had
Yeah.
that ramp up,
Okay.
and we're back probably maybe 5% from those highs.
Mm. Mm. Interesting. Yeah, I agree with Cliff, man. Whenever there's a potential crisis scenario, which this realistically is, you as a home buyer have to become more astute in negotiating and strategy. I love what Cliff just said. He said, "Hey, typically you're probably the only offer on the table."
Mhm.
And nothing wrong with that. I'll be the only offer on the table. But at the exact same time, every week follow up with them. I say, hey, my offer's still there. It's still there. Hey, let's talk some numbers. Talk to me. What can we end up in the middle? Talk to us and begin to reason.
Yeah, and you want to talk to the real estate agent. They know that these are going to be negotiations.
Hmm.
They're aware of that. So yeah, just try. And before you put in an offer, I always say this: don't just put in an offer. Call the realtor first. There's no reason of spending time writing up trying to get contracts. Call the realtor first and say, "Hey, like the property. If we were to give you X, would they even would they take that? Would they even consider it?
Hmm.
Get that negotiation first before you put it in writing, so you can save some time."
Yes, and also if they're committed to a price point, guys, say, okay, if I give you this price point, what concessions are you willing to give me? What concessions? Right? Because I want this price point, you want this price point. We're not going to meet there, but hey, I give you this price point, but I want concessions. Right? And you walk through your home inspection. Hey, I need money for this. I need money for this, this. And they will begin to see, wait a minute, I may want to give them get this down a little bit if that makes some sense, right?
Yeah, and the big ones I would say is HVAC and hot water heater. Your So your home inspector is gonna have a good idea of those, right? But at the end of the day, you want a fresh one. I always say if the hot water heater is more than 5 years old, you should ask for a replacement at closing or before closing because they're cheap. It's about 2 grand turnkey. You get one in, but you get a brand new one because you don't want down the road once you move in to have to replace something with your HVAC or hot water heater. That's gonna cost you thousands of dollars.
Thousands of dollars.
That
Thousands.
you can try to get that deal up front to say, hey, I want a new condenser. That's about 3 to 5 thousand. Or you can say, hey, I want a new furnace. If it's older than 5 years, I'm gonna shoot for that. I'm gonna try for that.
Yes, yes, sir. And then lastly, guys, real quickly, I know we got investors watching this. What are the top question answers that investors should be doing right now to take advantage of this opportunity? I'll go first on this one, Cliff.
All right.
Same thing, guys. Become a better negotiator. Learn how to locate distressed properties. I hate being in competition with other investors. Think about it. Would you be more apropos to buy a property if you're the only offer on the table, or if you have 10 other offers on the table? For me, it's the only offer on the table, mine alone, because then I'm negotiating one-on-one with the seller. How do you begin to position yourself to be in that situation? Simple. What you do is you become an expert in locating distressed properties and a better negotiator than your seller. That takes skill, learning, mentorship. If you agree, you disagree.
Yeah, 100%. The best thing you can do, like Dale said, is learn how to negotiate and learn what a deal is. Like, what is a deal? You hear us talk about it all the time. What is a deal? What does that mean? You
Yep.
know what I mean? You gotta walk through it so that you want to be solvent at the end of the day. And
Yep.
it's better not to buy a bad deal than it is to get caught up and and overpay for a deal.
Yep.
So, man, there's all kind of stuff that you want to take into consideration. But yeah, I always try to negotiate. You can always get better at it and try to figure out exactly what they need. And at the end of the day, just buy it at a good price. That's the best thing you can do.
I agree with you 100%. That's how we would typically do it. And Cliff, you and I practice this every single day. Is we like being in deals to where we're the only offer on the table,
Hmm.
and typically that means we go into areas that most people don't want to go into. But we have our exit strategy already in place. Investors, make sure when you begin to invest in real estate, right, know what your exit strategy is up front and then work backwards. Don't work forward, work backwards. If your strategy is to flip, work backwards from that strategy. If your strategy is to long-term lease, work backwards from that strategy. Work backwards. End goal, then work backwards, and then you'll become more successful in your real estate investing. Cliff, you agree or you disagree?
Yeah, I agree. I agree. Um, yeah, you got to start with what you want. And I would say if you're just getting started, if you've never done a deal before, go in with the expectation you're going to rent it.
Mm-hmm.
Don't try to go for a flip on your first property. There's too many
Mm-hmm.
things that could pop up, and we seasoned, and we still have stuff that pops up. Still got issues, problems that just those things come. I mean, you can't see everything, right?
Yep.
You deal with all the problems you can. So I would say the first deal you want to do, try to make it a rental property because that way at least you have a way of getting out that deal that's pretty straightforward.
Yep. Yep. That's it, guys. That's it. So, guys, I hope we helped you out today. Do not get discouraged, guys, when it comes to no news like this at all, guys. This right here, guys. When you see stuff like this here, government hiding foreclosures, 1 million FHA loans in default, guys. Most people become very scared. This screams opportunity. This screams strategy. This screams community. This screams support, because the strategy of the deal will attract the cash, and it would also attract the mentor if you need one. If you agree?
Exactly. Yeah. And then once you get rolling into it, you'll get a better idea. But the government getting involved, they don't have no exit strategy.
Yeah.
That's the situation where they don't
No.
have no exit strategy.
Their strategy is we just gonna print the money out and then tax your ass on it, just for giving it to you. So we're gonna borrow from the future to pay for it today, and then tax your ass for what we just did. You're welcome. That's their strategy. Every time. That's what it is. But guys, if you want to say anything, man, before we get off, big dog.
No, man. If y'all are looking at deals, hit us up. If y'all are thinking about deals, hit us up. You know, we trying to find some new ones. If you got a deal, let us know. And if nothing else, you got some free advice. If you're not sure, take that ebook, download that, learn a little bit of something, and then we can try to catch up later, man. And you know me, I say the same thing every week. You one deal away. And if you're thinking, hit us up and maybe we can help you get that first one.
Guys, it didn't cost you any money to do two things. Download this ebook, it's free. Watch the masterclass, it's free. Or send us a DM talking about a deal. And I give you an example. One of our mentees, I'm not gonna mention her name, she sent me over 2 transactions, 2 deals, 2 of them that because they didn't know about it. I got them yesterday. I'm gonna send them over to them. We're gonna walk them together. 2 deals. 2. I let her know that we are aggressive right now. Cliff, are we pretty aggressive when it comes to real estate right now?
Yeah. If we can find a deal, we're looking for it.
It's real simple, guys. You have a licensed appraiser on the screen. Also, someone that's Cliff. I think we've probably acquired anywhere from 400 or 500 deals over the years. Easy. Together, you and I. So it's just you get that type of knowledge here. And then guys, it's for damn free. Didn't cost you a dime. Our whole philosophy is go ahead, Cliff. Go ahead.
And I'm gonna throw something out here. I ain't mentioned this deal. I'm seeing it right now. The first 3 people to download, we will find a deal in your city.
Ooh, hold on, Cliff. Say that again for the folk in the back row. Say it again.
First 3 people to download. So if you download this, first 3 people, we will find a deal in your city.
Yes, we will. We'll find a deal with you in your city. And what we'll do is me and Cliff, I'll find a deal, Cliff will find a deal.
Mm-hmm.
And what we'll do is we'll say, who found the best deal? And we'll go back and forth live on your deal while you're there talking to us. And we'll go back, okay, what's the purchase price? What scope of work? Now, how do you get this number? You'll get to pick into the mind of me and Cliff. We call it find your deal.
Right.
Find your deal. The first 2 people that actually download the ebook. We're going to know because I get an alert every single time. First 2 people, we reach out to you. Hey, what city you in? Where you want to invest in? No problem with it at all. And then what happens is we then do a find your deal with you live and in person. We'll do it on the Real Estate Live.
Exactly. We'll walk through it. So you'll get to see how we're looking at your area, how we kind of analyze it, see it through our eyes. We're going to figure out what the best one is. So hurry up, download it. We can walk through it. You can see what's going on in your own backyard.
Yep. Click on the link below in the show notes. DM me the word real estate if you can't do that at all, which is on the screen. Or you can scan on the QR code, download it. It's free. Doesn't cost you a dime. All right, guys. Well, guys, that's all I have for today, man. You want to say anything before we get off, big dog?
No, we good, man. Everybody, man, just enjoy your weekend. Download that ebook, and we're going to go over them numbers pretty soon.
Yes, sir. You know, I mean it every single time, guys. Before you leave, while you can, you see that thing, baby. Take that down picture, give it to your mom, and holler at your partner. See you guys next week, guys. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you're wholesaling first. Okay,
because I was broke. I had no credit, I had no money, so I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated. There was.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property. Right. The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made that lion's share of my money.
Wow.
People were
Okay.
actually running from the cows. I was running to it
Of course.
because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course. Of course.
I
Of
said,
course.
okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties, and I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holler at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.